Hello everybody, this is Alan Brochstein from New Cannabis Ventures, and we are here today to speak with Aaron Keay, the CEO of ABcann Medicinals, which will begin trading publicly, I believe, next week. We're going to talk about that. Before we get started, I wanted to introduce myself briefly and explain why we're conducting these interviews at New Cannabis Ventures. But first, a quick disclaimer. None of the content within this webinar should be construed as investment advice. New Cannabis Ventures is not an intermediary, a broker-dealer, an investment advisor, or an exchange, and we do not provide investment advice or investment advisory services. No securities are being offered in this webinar, and we have no access to non-public information. This webinar is not a place for giving or receiving financial advice, advice concerning investment decisions, tax, or legal advice. Please note as well that ABcann is a client of New Cannabis Ventures. We currently have a dedicated page on our site that helps visitors learn more about the company, and we will soon be transitioning to the fact-based, data-driven investor dashboard format for the company. Investor dashboards quickly tell the official story and financial status about the company. Now I'd like to tell you a little bit about myself and why you should listen to me. All right, well, first of all, I've been following the cannabis industry since early 2013, and I've been in the financial services industry since 1986. I was blogging on Seeking Alpha, had about 600 articles on the site before I became really one of the very first analysts to cover the cannabis space and really connected with a lot of you listening to this webinar and others back in 2013 when I tried to kind of shine the light on what was the Wild West of cannabis stocks. Thankfully, we've come a long way since then. I've been running 420 Investor since late 2013, and this has become the largest community of cannabis-centric due diligence out there. And we have many members listening to this on 420 Investor, and I thank you not only for tuning into this, but for all the support over the last few years. We've really helped evolve the sector in a positive way. I started New Cannabis Ventures with my partner back in late 2015 as a way to highlight some of the best companies, and unfortunately sometimes have to discredit some of the worst in a more public way than I could do behind the paywall at 420 Investor. And so we've been at this about 18, 19 months now, and it's a very exciting time. We've seen an evolution in the cannabis industry with publicly traded companies creating a lot of value for their shareholders, and we've evolved past the Wild West days from early 2013. One of the most interesting parts of the entire publicly traded cannabis sector has been up in Canada. As you know, we cover this space extensively, and we are representing ABcann, and I'm happy to introduce you to the CEO, Aaron Keay. If you don't know of Aaron, he has been working in the capital markets for the last 11 years in a variety of different sectors. Aaron's roles have ranged from corporate finance, senior management, and board member. He's also overseen finance and M&A transactions and capital raising, helping private companies navigate from private to public markets, including Organogram, which you may be familiar with. His work and leadership have helped raise about $250 million for both public and private market issuers. So with that, I want to first say to those that were on our live webinar that unfortunately had a technical glitch, I apologize. We are all about saving time, getting you very good information in quickly, and so we're happy to have Aaron back today, and we are going to go through the presentation. I received a lot of questions from people who wanted to ask some questions of Aaron, and I will ask these after his presentation, as well as some other ones. So with that, I'm going to turn it over to you, Aaron. Let me just get your slides up real quick, and we'll get going. And it's all yours, Aaron.
Perfect. Thanks for the introduction, Alan, and thanks for the opportunity, everyone that's focused in and wanting to listen. Just one little comment that I would make with respect to the actual, what will be the surviving public company. The public company name will actually become ABcann Global, because we will be acquiring ABcann Medicinals as a subsidiary. So if you are searching for it online, it's ABcann Global, and the actual trading symbol to that will be ABCN. But where I am on the slide deck right now would be on just an introduction to the company on page 4 of the deck and just talk at a general high level just about the company and how well positioned the story is. So it was one of the first licenses granted back in 2014. It is fully licensed from cultivation and sales standpoint. The company has raised approximately $20 million prior to this 25+ million that we're raising or closing on as we embark to become a publicly traded company. From a capacity standpoint, the company currently has a production capacity at our first facility at Van Leuven of 1,000 kilograms, which is a 15,000 square foot facility. We will be commencing construction to double capacity there very quickly. And the main priority with going public and the capital raise that we've completed is to complete our second facility, which will be a 150,000 square foot facility, which will be built out in 2 phases. The first phase being 71,000 and the second being 80,000 square feet roughly. Beyond that, what I'm going to get into is what has made ABcann very special and a very unique story. And I think what's made it quite exciting is the state-of-the-art initial facility, which will be then scalable into the second facility, about how we grow and the techniques to which we grow and why our yield numbers, which is a big differentiating factor that I'll speak about, are quite higher than the industry average. And then from there, those 2 main facilities that we're focused on domestically in Canada, we're going to really focus on some global initiatives as you're starting to see other countries really start to adopt and model themselves after the Canadian rollout. So just moving into the next slide, I think for the majority of you in the audience, slides 5 and 6 paint a pretty clear picture that I'm not going to go into a lot of detail about. I think it's well received and it's well understood now that not only in Canada, but globally, the market sizes for the marijuana sector in both the medical and soon to become adult use and recreational are significant. If you look at the slide on slide 6, you can see that it's going to rival some of the more traditional tobacco, spirits, and wine industries. And we will start to see rules and regulations around how they're distributed into specific stores, pharmacies, and distribution channels that I think will closely mimic some of those areas. So it's a big, big market. We all know that. And ABCann's well positioned to do that. So moving into slide 7, how do we take advantage of this opportunity? Well, we are organically grown, which I think is going to have a huge play as we cross over into recreation and adult use. There are absolutely no pesticides used in our growing process, and that's a big statement. We know that there's been some issues in the industry as we go through infancy stages of a new emerging sector, but we have no pesticides. And how do we do that? And it's by that controlled environment that I'll get into that keeps it confined, and we monitor and control every process with the plants and their growing. Our customer growth rate and our retention rate has been phenomenal. We've only really been taking in patients since September of 2016. We stopped doing any wholesale model in December, and our patient count has almost grown 500 or 600% in the first quarter of this year. So substantial increase in patient base, and at this time, patient base really is not a big problem in the industry. It's obviously still growing and creating the demand and the supply to feed that demand is what's important. Just moving into slide 8. So how did ABcann really and the story come to be, and how was this technique and this proprietary technology that we have developed and grown? Well, our founder, Ken Clement, has spent a few years in the industry and looking at different opportunities on how to grow, whether it was from an indoor standpoint or a greenhouse situation, and we are 100% indoor growers. We partnered with the University of Guelph and an individual you can see on that slide by the name of Mike Dixon. Mike's got an amazing reputation for globally and speaks frequently around the world for somebody who's been able to replicate and consistently grow different plant species in the same environment. And why is that important? Obviously, marijuana is a plant. And what does the consumer and the end patient always want? They want a consistent product that they can rely on and that they can trust that it's the exact same. And that's not easy to do. And that's where Mike spent the majority of his life. We put $1.5 million into our 3-year partnership with them to date. We're going to be building out a special growing room within our facility to facilitate looking at different technologies for continuing to improve our yield. So that number you see with the magnifying glass there, times that by 6. And that was done in a controlled environment that Mike grew. And that's what you get as our yield rate, which would be 600 grams per square foot if you did multiply that number by 6. Am I saying that that's what we're going to do out the gate? No. I'm going to go into a slide that's going to talk about industry averages and what it is that we will do, but it does show that there is obviously room for future growth as we continue to work closely with Mike and develop this technique. So what is this technique of growing? It's in, I want to actually come back to actually I'll comment quickly on it, everyone, just on slide 9 with respect to Psyche. Psyche is going to change the landscape of the medical marijuana sector, and with respect to the inhaler you see at the bottom corner. Difference between an inhaler and a vaporizer: you inhale product goes back out. An inhaler is like somebody who has asthma. Product comes in and you can measure it, and this is the first meter dosage inhaler that's going to be available in the market. What I can tell you is that we're working very closely with them, and Teva Pharmaceuticals, both are Israeli-based companies, and we hope to strike some sort of an agreement or deal or partnership down the road with Psyche as they get ready to commercialize, where we are the dried cannabis that's used in that product. Why have we think they elected us? And you see a quote from their founder: because of this consistent approach that I'm going to go into, where every batch and every crop that we produce is damn close to the exact same, crop over crop and batch over batch. So let's just jump back into that and the advantages as we move into slide 10. So we've developed this unique environment to which we control. We control every part of the system. The product is grown in 1,400 square foot grow chambers with proprietary technology and lighting that we could replicate anywhere in the world. So if we want to look at how do we scale it, and the difference between going into a 300,000 or 400,000 open room facility, all of our rooms are like small pods. And the goal here is to be able to replicate each pod as you develop the product. It's much, much different, and it's using organic fertilizers, different soil medias, again, no pesticides used within these controlled environments. So it's much different than going into a large greenhouse and seeing like thousands upon thousands of square feet of plants all being grown in the same, in one open area. What does it do to help us? If you slide into the next slide on 11, there's things that help us from a cost standpoint, but it's a controlled environment that's also computer monitored. We know when the plants are healthy. We monitor their water levels, their CO2, their oxygen. There's computers that are altering the direction of the wind and the air conditioning, and the temperature and the humidity in the room is controlled and monitored, so we know when there's a certain section. Why is that important? When you're growing plants and species like this, you're going to have insects that probably come in at some point. We can't have that because it's a closed-off environment. But when you're growing in these settings, you are going to have things like that could come in and potentially be mildew, and that's where you're seeing other people use things like pesticides or Millstop, which some of these are Health Canada approved for sure. But again, this environment eliminates that risk because it is closed off. And obviously, one of the big components to this is that basically from the curing process, it is also climate controlled. Just moving into slide 12. So what does that closed environment look like? What does that mean for the end product? Why would we go this route? And you will see other companies go this route for sure, but it could take years and a lot of money to get there, because what it is a proprietary technology. And how that leads into the end product, which obviously consumers and patients care about with the company and making money, is that our yield rate is substantially higher. So this was a report that was put together by a group called the BOTAC report that adopted yield per square foot rate from across the industry. What's important for you, if you're looking at slide 12, is to look at the industry averages on greenhouses and the industry average on indoor facilities, which are roughly 60 grams on greenhouses and 130. How does that look for us? We're double what it would be on the indoor and about 4 times bigger on the greenhouse. Why does that matter? When it comes down to costs and profitability, we can then stretch out our cost per gram to lower that down to be as competitive, if not cheaper, on a cost per gram than anybody. And then if you look at our sales and the consistency and the high quality product, we are averaging at a higher per gram average than the industry as well right now. I believe in our last quarter was roughly $10 per gram, which is well above the industry average for sales. What does that all mean from a company and a business standpoint? We're making a better profit. What does that also mean? If you slide and go ahead to page 13, is it's a lot of savings for the company. Our water savings and water usage are lower. Our electrical savings, because we use less light, in this environment are saved. There's no pesticides cost. Our fertilizer savings because we don't use as many. And our water is also all recycled. It's all done through reverse osmosis, so the plants absorb it much quicker, which leads to that healthier, higher quality product. So that's a bit of a kind of a 5 to 8 minute run through on why and what it is that we've done from our growing technique and what the company really spent through the last couple of years mastering this, and why we've got that initial facility now at full capacity. We're doing an expansion there. And what does it come out to in the products that we've developed? If you go into slide 14, that's just an overview of kind of all the different products. You can see the different levels from the THCs and the CBDs and the different names. Some of them you probably are all very, very familiar with, because you can look at the small fine print and it gives you an indication of that. If you slip ahead into slide 15, this is when I'm going to change and come a bit out of the growing techniques and what's made the company special from the refined operations into, well, how do we scale this business? How do we grow? And how do we become a force, not only in Canada, but globally as a household name, both in the medical, mainly in the medical audience, and as recreation comes, there's going to be that natural crossover. So our phase 1 facility at Van Leuven is going to double capacity by the end of this year. We'll be cultivating and selling out of there, so we'll be up to 2,000 kilograms, can service probably around 3,000 patients from that facility. And at the same time, we will then move into the development and the construction of our phase 2 facility at Kimmit. And this is going to be what is going to allow us to service different countries in the world, whether it's Germany, whether it's something with Psyche in Israel, which will eventually lead to global sales, Australia. That's the primary focus. What's special about the Kimmit property is it's 65 acres. It's fully zoned. It's already agricultural. It has electricity, all the hydro, so none of that needs to be rebuilt into this property. We can build out 1 million square feet there, which is important when you look at where does this industry go in 5, 10 years? Does pharma come into it? Does tobacco come into it? Who comes in? They're going to look for big footprints. They're going to look for companies that have scalability and where they can continue to grow in the same confined area. So if you look at what ABCann's going to do, 150,000 square foot facility on this land here, and we're going to expand and build over time. If you move into slide 16, this gives you an aerial view of both of the properties on the left. They're basically around 500 meters apart. If you look at the ABcann facility land on the right, you can see the clear-cut area. That's the initial area that we're going to start our construction on. And then you can see the vast amount of area that we have to continue to build out and scale. And we'll be doing that hopefully through cash flow, hopefully through other non-conventional financings, because I do think you're going to start to see that in the industry. From a capacity standpoint, what can you expect out of that initial facility that we've now just raised this capital for? The slide on 17, it can be a little confusing. What's important to see there is I'd just go right to the top number on the 20,000 kilograms, and I'd focus there. That's what we believe we can do as a capacity, and that would put ABcann into that top 5 production profile in the Canadian marketplace upon doing that. And that's where I'd really focus on. The other numbers are things where we're single stacking or double tiering our growing techniques and mixing in Van Leuven. What matters is that we've now in a position to scale. Our technology is proven. The way that we grow is proven. We have the land. We've paid for it. It's zoned. We have the team in place, and now we can grow into that area. If you move ahead onto slide 18, this gives you a bit of an overview as to what to expect. As the CEO of ABcann, I definitely want to be measured on am I delivering on the timelines and the expectations of me. So you can look in different quarters. I've reiterated most of this, but construction at Van Leuven and doubling capacity there is extremely important. Initiating the phase 1 at Kimmit, hopefully getting a distribution license and start exporting in Germany, getting this company to a break-even stage, and then obviously completing construction at Kimmit and bringing that online, which will allow us to serve thousands upon thousands of patients worldwide. Just from a capital structure standpoint, this will definitely be updated. We're in the process of closing the financing. We're in the process of becoming publicly traded, but as of January 30th, roughly 80 million shares out. We had a $5 million debenture that converts to 20% discount. You can see the warrant numbers that are there. There's about half of those sit with some of the old management team from the money that they had invested, and a lot of them sit with 5 specific institutions and 1 other LP. There's about 12 to 13 million of those are in the money. Total issued and outstanding is 122-ish, and the pre-money valuation that we're raising the capital on and just closing on right now is 64 million and roughly 105 million fully diluted. That current financing you see at the bottom on slide 19 of 8 million was upsized just to 10, and I added on a specific convertible instrument at a 30% premium, which has not been done yet in the sector. So that converts to $1.05 with 1 institution for 15 million, which we thought was very accretive and very positive to show that type of confidence with having 1 market-leading institution take that big of a position in the company. As far as the comps go, I view it as this. I think the sector in itself has risen to date as together, and I think as the market trades, some days the market is up, some days the market is down, and most of them are shared. From a comp standpoint, we have the same size of facilities, a number of the ones you see listed. I don't really like to go into a ton of specifics because everyone's got a different technique to how they grow. So to date, it's not that easy just to compare the apples and the oranges to use a bad cliche, because the growing techniques are different. But from a capacity standpoint, we're very similar to the ones you see listed there. Obviously, Aurora and Organigram being a bit out in front. But you've seen our plan. You've listened to the plan on how we're going to play. I don't know if I'd call it catch up, but our growth strategy for expanding and developing our other facilities. Moving into our team, so if you move forward to slide 21, our team and our management team and our advisory board and our board of directors, it's a great group. So Ken's done a phenomenal job. It's been primarily his vision and working with our master growing team, Guelph and Mike Dixon, to develop that technique. And then there's a bunch of individuals that have spent so much time, and Jenny and Neil, their bios are there. What I like to talk about with my team is I never like to single out 1 or 2 individuals, because it is definitely about each person's contribution. It is a group of been there, done that people. If you move into the board of directors, you can again see from their bios, but it's a great complement. You've got a capital markets person in myself, you've got a visionary in Ken, you've got a phenomenal business development director in Andrew Lacroix, and then if you look at the experience that Daryl Cramp brings from a political standpoint, John Eason in the capital markets, and Paul Lucas is the former CEO of one of the largest pharmaceutical companies in the world at GlaxoSmithKline Canada. You've got just a great board. And then I'm very humbled anytime I start to speak about my advisory board on page 23. Raphael Mashulm is referred to as the godfather of cannabis. He's been instrumental in assisting and helping our reputation as we look globally. And then obviously you know a bit about Mike Dixon. Again, their bios are there, but every single one of these people are held in the highest regard globally in the medical community, and it's been an absolute pleasure working with them. We will have 1 additional advisor that is named very, very shortly to the board. It will be a household name, especially in the capital markets and Canadian sector, and it'll be someone that I look to for future guidance as we continue to develop and grow the ABcann story into hopefully a billion or multi-billion dollar story. Moving into a bit of a summary on and just the potential for the story. We've got over 65 acres for growth, one of the largest in the industry. We're fully capitalized after this financing to get us into a place of phase 2 construction and moving into the Kimmett facility being developed. Low costs underpin our attractive cash flow potential. Sales growth with revenue capacity and improving cash flow immediately because of this patient growth. Our cost and margin profile is a result of our higher yields and our low-cost production operations, and is continuing to improve and bring down our costs as we go into expansion mode. And we've established operations team and an amazing board of directors. I'm going to save the ABcann advantage in all the bullets. Everybody can read those. It's a great little summary page about it. More importantly, I just want to thank Alan, his team, for the opportunity, and for everyone listening. ABcann should come to trade in the coming days. The symbol will be ABCN. We're well capitalized. We're very well positioned for growth, and we spent a considerable amount of our time mastering the technique to which we're going to go and scale. as opposed to taking on any risks with doing that. We think we've got a good model now to go forward and become one of the leaders in the sector, not only in Canada, but globally. So thanks for the opportunity and look forward to any questions.
Okay, great. Thank you, Aaron. That was very informative. And I've had a lot of questions about, you just said you're going to trade starting soon, which means you probably don't know the exact day yet, but hopefully next week. Is that still correct?
Sorry, Alan, you cut out?
Is trading, do you expect it to begin next week, or is there an update on when you expect it to trade?
Yeah, the process, it's tough when you're in the middle of a reverse merger, as we are doing, to get our IPO completed. We are roughly waiting any hour, to be candid, for confirmation that we're closed. All the capital is just being, the paperwork's being done. I would expect to tell the readers that and audience that we can trade. I'm hoping next week, at the latest May 1st.
Got it. And then I get this question a lot, and I'd like to hear your official response, given you must get the question a lot as well. We have obviously if you're in Canada, this will be trading on the TSX Venture, and you can buy it once it starts trading. I think there's a misconception out there that there's a known price. I can tell everybody that there's no known price. It starts trading. But my question is, for those in the United States, are you are you going to get a U.S. listing, and B, in the interim, is it possible for U.S. investors to buy the Canadian ticker?
Yes, U.S. investors can buy the Canadian ticker. There's different options on depending on if they have a brokerage account or if it's online. What typically happens is there will be initially somebody, most likely, who buys the stock in the States will then have a symbol put up, and unfortunately it's on what they call the pink sheets, but that's just a clearing symbol. It's not an official listing, because our official listing's on the TSX. But that's a place that they can buy it, and then we'll obviously, you can post that and people will be aware of that, and they can search for that, and it's easy to find. Eventually what we will do is we will list on probably the OTCQX as a second sublisting, but that does take time, probably 30 to 60 days after we're trading.
Got it. Okay. And then my next question, you spoke at length about your team, and you mentioned that there was an old management team. I'd just like for you to share with the audience kind of what attracted you to this story. And I think you've been at ABcann, is it a little over a year now? But if you can just kind of talk about how you came to your position, Aaron.
Yeah, that is a great question, and I missed that. So about a year and a half ago, I looked back in the sector because I've been around it quite a bit, and I went to a number of facilities across the country, mainly looking at the private ones and trying to identify a company that I would love to get involved with and put some money into, invest into, and maybe they needed somebody to get them into the position to be ready to go public. And there was 3 that I went deep down the path with, and ultimately what kept leading me back to ABcann was what everybody kept saying about not only the product, because the product always matters in anything you're doing, but that technique to how they grow it and it being consistent. So that's how I got involved. The ironic part, which Ken and I laugh a lot about, when we actually signed the deal, did I think I would become the CEO? No, but one night over a glass of wine, him and I were chatting, and he's so operationally driven and got such a strong vision for this business. It just made sense. It kind of just happened naturally, which is, sometimes the best way for it to happen. And it's really worked out. It's allowed me to focus on the capital market side and the positioning of the company and strategizing with our board and our team, and for him to focus on the operations and the development. So that's kind of how I got here.
Okay. So one of the things that I received some outside questions on, and I want to get this addressed quickly, is everybody understands, you guys you have customers now, you have revenue, you're selling into the medical market, but how do you envision your company changing as it approaches the recreational market in terms of its go-to-market messaging and things like that? What are you doing to position for the recreational market?
So ABcann Medicinals, which is the company being acquired by Panda, which will change its name to ABcann Global, will be a subsidiary, and they will always be focused on the medical market and to keep that separation. Whereas ABcann Global is going to benefit as the public company, as a company who can drive into different categories within the marijuana sector itself. part of our strategy is, now that you're seeing legislation and laws change in Canada and also in other countries, is there's going to be natural spillover for sure right into the recreational user. You're already seeing it. For years, you can canvas like a casual adult user, and what do you look for in a product? A lot of people always say, well, I want that pharmaceutical consistent grade. I want to know that it's the same product. So we believe, because of our growing technique, it's going to have a powerful message, and we've already developed cheaper, cost-effective routes, because I do think the recreational market is going to garner a different price point than medical. So we've already got that stuff figured out. As far as our strategy goes in Canada, you could see me doing 1 or 2 acquisitions into the space. You can definitely see me doing some joint ventures and partnerships in the space. And then we're also working at developing our own brand under that section that will be rolled out as more legislation comes. Because one of the wild cards to pay attention to is going to be, how is it distributed?
Sure.
So is it distributed under your medical branding in your packaging, or is it going to be a completely different area? And we'll start to see things and news and updates from the government that's going to help us define that. But as far as a cost perspective and marketing standpoint, I think we've got a pretty good handle on it. I think there's going to be a lot of natural crossover.
And then obviously the way the Canadian LPs started off, it was kind of like Colorado, where everybody almost had to be vertically integrated. And we're already starting to see that model break apart a little bit, with some people focused on just the production side and others just on the sales side. You guys have obviously invested in all aspects of the business, but going forward, do you expect ABcann to have more of a focus on distribution, more of a focus on production, and how does the processing into extracts, which are obviously going to be a bigger and bigger part of the market, how are you positioned for that?
Right now, so we've worked at length with the University of Guelph and looking at different areas like that. We've worked with a couple companies in the U.S. To refine and develop some techniques. The first step, just so we can kind of nail down steps to it, we will acquire our extraction equipment, which you have to put into your facility before you can get your license. So we don't have the oils license, but that usually comes in time. It's not something that's lengthy. What I would probably look to say from us is that I would expect news in roughly 6 months, whether it's through one of those joint ventures or partnerships I talked about, or an acquisition of somebody who becomes our formulation and extraction partner. I believe it's like we would be looked upon, in my opinion, as a premier grower from our technique. The extraction, the oils business, the packaging, the branding, and the different delivery routes and systems that you can look at, I think there's experts everywhere in the world now in that area, and doing stuff in collaboration with them, or hopefully through some M&A, is the best route to go. And we spent a considerable amount of time doing that, and we've got a number of different discussions going on.
So you're not going to reinvent the wheel on the oils, but as you look out, especially as we transition to a adult use or recreational market, do you see you guys being more of a producer, or do you expect to really beef up your especially on the medical side, patient acquisition and all of that?
Well, I think from a medical standpoint, we're in such a strong position because of the consistency of the product, that what pharma is looking for on the medical side is something that they can say it's the same every time. You can't put something on a package that's not accurate, right? From the level of THC and the CBD that's in the product, it's got to be consistent batch over batch. And we know right now that doesn't happen everywhere in the different growing environments. But from the oils, will we be somebody who develops a brand? One of the ways that I look at it in the dialogues that were going on, and I got to obviously be careful about how much I divulge about our strategy, but if you're working with people that want to develop brands and be a brand, they need good product and they need great product. And for that, we feel that we're going to be in a position to be that product provider. But I want to do it in collaboration and in joint ventures, so we have some say on what actually goes to the consumer. So how that looks, Alan, I honestly don't fully know, but I can say right now that is definitely one thing that we're pursuing, as being a product provider to somebody, and to watch those experts work on the packaging and the branding. Okay. And then hopefully, as my market develops we will most likely to grow in that area. I think a lot of it will be done through acquisitions on already known existing brands.
Okay. And one of the great things about Canada right now is that it's quickly becoming kind of a source of intellectual property and capital as well for the rest of the world. And obviously, I think you mentioned Germany is, and I think most people are aware that's going to be a very large market, medical market, due to the population size being about 2.5 times Canada's, and the fact that it's going to be covered by insurance and distributed through pharmacies. So probably a very big opportunity. You've already mentioned that you're involved, and I think you even have a ABcann Germany unit set up. What is your outlook there? Will you be putting capital into that country if you win this license? What are you doing there?
Good question. You've done some digging, so I applaud you for that. In short, if I was like an American investor right now, and then looking at the different countries, Canada was probably the pioneer. I mean, that's right now in getting it to the levels that it is. I think Germany, given you've got 80 to 90 million people, which is 2 to 3 times the size of Canada, is going to be a very similar market in Canada. They're very medically driven right now. Legislation just came out last week that they're going to award 10 licenses. The process, if you can translate it, has become public. There's an application deadline, and there's very strict requirements. And the requirements are that you've produced 200 kilograms previously in another jurisdiction as another producer. So it puts a lot of hamstrings actually on their own domestic production, because I think they want to look to more of a distribution model to start. And we're very well positioned for that marketplace. And beyond that, I'd be pretty uncomfortable going into where are we, but are we focused on going into that market? Absolutely. What do I think Germany leads to for Europe? If I look at the history of a lot of the European countries, they follow a lot of what happens in the German market and what German does for new laws and new regulations. And I think that if you look at the Euro and Europe, that's probably what's going to be rolled out after that, if you start to really forward think.
And just following up on the whole international topic, are there any other jurisdictions in the world that you're focusing your attention upon?
Yep, Australia eventually, obviously with Psyche in Israel, but I like to come back and say that we want to make it a simple story right now until laws are cleaner. Canada, create a big foothold market share in Canada, both medically and in the adult use market, and then it obviously expand into Germany as an initial focus, and then be nimble from there. But those are going to be two big markets in their own right, and you don't want to get distracted.
Okay, and switching gears a little bit, you did a good job of talking about your yields being higher than the industry, but can you translate that into a cost per gram? And I understand that a lot of different companies are quoting things differently in terms of all-in cost, cash cost, and what goes into those costs. But can you kind of explain to us how you're looking at your cost of production at present and where you think it can go?
Yeah, I'll do it in ranges because everyone's different. So everyone's different in the labor. Is it materials? Is it production time and cost? Is it sales? Is it marketing dollars, R&D? So I would do a range that right now we're ranging anywhere from around 250 to 350, depending what metrics you use. And our goal is to get down and really start to focus around that 2 to 225 and tighten up the range. And we believe with Kimmit that that's going to be the range that we'll be able to function as all-in costs.
Okay. And then capital raising. If I heard you right, with the close of the pending transactions, you'll have about 45 million. Is that what you said that's been raised?
Did you say 45 total to date? It'll be 47.5 million, almost bang on,
right.
Total in the company to date.
And so in some ways that's super impressive, obviously. And in other ways, you're a little bit behind some of the companies in the space. And I'm just wondering kind of what you think the right capitalization is going to be ultimately for your company. If you have a strategy, obviously, you want to start trading publicly before you raise more capital. But do you have an outlook for how much capital you think is necessary to be what I think you said was your goal, to be a top 5 producer?
Yep. That's going to be my job to navigate. As taking care of your shareholders is important. You got to factor in dilution, and you got to factor in where your share price is, and you also got to make risky calculations on where's the market going. Where the valuation is going to grow to? Is the market going to keep going? Is the investment dollars going to remain the same? Are there good strategic partners out there? I think you're going to see other LPs take bigger pieces. We're fortunate enough to have Kronos, publicly traded company in Canada, who I think is one of the best management teams out there, own a good position in our company already. I think you'll see more of that. I think what AFRIA did yesterday in taking on a non-conventional debt instrument, I thought that was interesting, because if you start to see debt come into at low interest rates on the facilities, on the security, that's non-dilutive to the company. And it does, at those interest rates, it doesn't eat into your margins. So, of course, if you want to keep growing and keep expanding, you're going to have to take the money. Look what's happened just in these last couple of weeks, $100 million into AFRIA, 75 into Aurora. I think you're going to continue to see these things happen. It's just a matter of timing. And then also, can you do anything strategic that continues to bolster that value and allows you to keep growing?
Okay, and then I had a question on your float as you come public. That's been one of the interesting things about companies as they come public. Obviously, like CanAmed did a direct IPO, and I know MedRelief is going to be doing an IPO, and obviously that's free trading stock. In your case, can you kind of walk us through how many shares will be trading, or could be traded, I should say, initially, compared to the overall number of fully diluted shares?
I believe our publicly traded float, I don't have the exact number off my head, but it'll be somewhere between roughly around 25 million will be in the float. Our management team owns a considerable amount of stock, as are some of the debentures that are done. So those would be the wild cards, is when do those debentures get converted, which would increase that. And then this financing that does have a 4-month hold from close. So
but from day one,
much will change initially.
I'm sorry, from day one, you're saying there's 25 million there's tradable initially?
Yeah.
Okay. And I think I've covered the questions that I received. I had one more, Aaron, actually, not the most important of questions, but I'm curious about the naming strategy that you guys went with, and you pointed out that you have to look at the fine print to see what the strain actually is. What is the thinking about your medical product names?
What was the thinking behind them?
Yeah, in terms of you're not marketing with sexy names, you're not marketing with conventional strain names, but if I could go back to the slide, your names.
On the medical side, you're right. Yep. There earlier on, the names were associated with kind of more street names, and we've made the decision from under the medicinal side to go purely on a medical side. And it's actually this came through a 6-month, 60-patient population type study. That's what ABcann did that I don't think anyone's probably ever done before. They spent 6 months with a confined patient population. They took all the feedback in, and I think candidly, in the medical side, I think patients really wanted to have something that wasn't, the feedback came. They told us they wanted to have something that was more medically driven towards certain things that they felt that they needed, as opposed to it being, a well-known catchy street name. Will we translate into those later when we go on the adult side? Yes, there'll be things that are catchier or branded and packaged for that for sure.
And as a follow-up, I noticed something kind of unique. It seems like you have 3 different offerings, if I'm not mistaken, for each of the strains you're growing, like a milled product, a standard product, and a hand-trim product, if I'm not mistaken.
Yep. Yeah.
And that
the hand-trim one's what?
Yep.
It is. The hand-trim one obviously garners a very, very high cost per gram, anywhere from kind of $12 to $16, and quite frankly, that product we can barely keep on the shelf.
And so how many strains total are you growing now? It seems like 8 that are being marketed at present, something like that?
Right now it's actually 7.
7, okay.
Yeah.
So, and then you have that 3 different offerings for each, or is that something that the milled and the high-end?
Does range on crop availability. So that's why right now I would say 7, and then there's 2 or 3 available within each.
Okay, and then I think I've covered everything, but I want to make sure, obviously you probably said everything that you want to say, but I want to give you one last chance, because I think there are a lot of publicly traded LPs right now, and there's more coming, and I'm sure that the investors, if my head's spinning a little bit, I'm pretty sure that people that don't spend as much time on this, their heads might be spinning as well. And so if I heard you right about what makes ABcann unique, at least some of the things I heard are that you have a real organic approach, your growing technologies different, the Teva Psyche thing sounded pretty unique as well, But how would you frame that in terms of what really makes ABcann stand out compared to other LPs?
The product. And it's not just standing out against other LPs, but the product being consistent, being trusted, that it's going to be the same type of product at the same levels every single time that you use it, is something that really hasn't been that adopted. There's been variances allowed and accepted, and I think if we go down the path of wanting to please patients on the medical side and consumers on the recreational side, people want to know that it's the same thing time and time again, just like they do if it's a wine, just like they do if it's a cigarette, I guess, or just like they do if it is actually their medication that they have for some other known disease or indication. They want to have that same consistent product and effect from it every single time.
Yeah, that's for sure. Well, we appreciate you taking the time to walk through your story and answer these questions. For those that want to learn more about the company, besides referring to New Cannabis Ventures, and obviously we have that page and we'll be converting to an investor dashboard, but more quickly, how can they reach out to you? I'm assuming I can change the slide and show them, right? Is that the answer? Or is there somewhere else you'd like to send them?
They can. What typically happens is they can send an email into the invest@ABcann, and we have a team that responds right away with an investor package or questions or comments right away. There's a phone number that they can call and speak to someone. They will get someone if it's not me right away, because I can tell you since we've signed up and built a relationship with you, the leads are getting into the the hundreds and the thousands pretty quickly.
Okay. So. Well. We will make sure everybody has that contact information. And to our audience, I want to thank you. This was our first webinar, and we hope to have more of these. We hope to have Aaron back to give us an update on the ABcann story as it progresses. So stay tuned for the first day of trading, and we will be sure to let you know about that. Thanks again, Aaron.
No, thank you, Al.